Hey traders, have you ever asked yourself how the big institutions and banks makes money? How they trade? If you want to trade like them, you need to master the order blocks. I'm not just talking of any order blocks, I'm talking of the key zones where those big institutions place their biggest trades. In this video, you will discover what are order blocks, how you can spot these money-making zones in few seconds. Lastly, how you can seize the opportunity trading with this big money once they have entered the market. We need to make ka-ching. You know what I'm talking about. Without further ado, guys, let's go straight to our intro. Let's start with the definition of the order blocks. These are the key areas where the large amount of money is being traded by the big players in the market. If you see the big moves like this on the chart, you should know that the big players, they have entered the market. This should be your signal. How are we going to identify the order block? So for the bullish order blocks, I will be using the green color, and for the bearish order block I will use the red one. Now after the price has made this massive move, we need to highlight the last candlestick before the big move, which is this one here. And you can see from this area here the price just moved, and then here it got rejected and rejected here. So for our order block to be valid, we need to have the break of structure or the change of character. In this case here, we have the break of structure. I will just type here BOS, which means our break of structure. So at this level here, we had the break of structure because the price broke the structure here, given us the higher high, which confirming that this area here, it is the valid order block. So we will wait for the price to come at this order block for us to find the entries. So one thing that you need to pay attention is to be patient once the price comes to the order block. Don't just jump in and then start buying. Just wait, see what is happening, because also the order block can be broken. At this level here, we can start looking up for the buying opportunities. Pay attention to the candlestick formation near the order block. You can see that we have the doji candlestick, which is one of the reversal candlestick, and then see like the price has been failing to give us the big momentum to show that the bears are in control of the market. So how are we going to place our trade? Once you see the confirmation that rejects that order block, you can go ahead and take your risk reward tool and target 1:2 risk reward, or you can even target the previous level. Always make sure that you look on your left to see where you can take your profit. This is how we can identify the bullish order block. Now we are going to move to the bearish order block. The price has just moved here, and then it has been giving us bullish movement. Here you can see that the price failed to give us the higher high than this one. So this was the high, and then the price failed to give us the higher than this one. Here the price has been consolidating. Finally it broke out this area. We had the change of character, I would say. Now after the price has given us this break of structure, do we have the imbalance at this area? So what do we want to see? We want to see the price coming back to this area to retest our order block for us to start selling. So don't forget that the price can do whatever it wants to do. So it continued bullish. Then at this area, that's where we see the bears coming in. Now looking at the bearish order block, you can see that the price shoot all the way up here. And now what is happening? The price is failing to give us higher high than this one here. If I mark here, you can see that the zone, and then the price failed to give us the higher high because it came down here instead of going up, then it failed. So we are expecting the price to come down, and you can see here we have the change of character. The price came here, shoot up again. Now where are we going to mark our order block? We need to look up for the impulsive move, that candlestick that is big, and then it shows that the big boys are just coming in. So I will just mark our order block as this one here, because that's where we see the price just move to this long candlestick and then gave us the imbalance here, and that's where I can just mark our order block. Then we'll just wait for the price to come and retest this area. We can just place our sell order after the candlestick rejection here, and then the candle that followed after, and this area here. Then the stop loss to be above that candle, and target 1 is to 2 risk reward. Just wait for the confirmations before you can just jump into the trade. All right, and that's it, guys. All the blocks are simplified. If you find this video helpful, smash that like button and then drop the comments below. Order blocks unlocked. Also subscribe, because next week I'll show you how to combine this strategy of order blocks together with the fair value gap for the better entries. Until then, I wish you all the best in your trading journey. Until we meet again on the next video.